GETCRACK. Wake up, motherfucker.
Major averages in the green today. Trying to finish that way. The S&P, the NASDAQ closing in on record highs yet again. Our next guest says the return of animal spirits sets the stage for even more upside in the months ahead. Let's bring in Ed Yardeni, President Yardeni Research. Good to see you. Welcome.
Thank you, Scott.
So you think the goalposts really have moved, huh?
I do. I think that, John Maynard Keynes came up with the expression animal spirits, and the idea is spontaneous optimism. And we did see that in 2016 when Trump was elected and Trump 1.0. I think we're seeing again in Trump 2.0. I think the markets are excited about tax cuts for corporations as well as for lower income Americans. So that'll help the consumer sector. I think there's excitement about deregulation. And I think there's even expectation that some of these geopolitical crises might end sooner rather than later with Trump's diplomatic intervention. So you put that all together and you get a very upbeat scenario. But I was pretty upbeat about things before Trump was elected, because I think we're also seeing a significant rebound in productivity growth. And that's really driving the economy to a large extent over the rest of the decade.
I feel like before, on the euphoria scale, if you will, you were almost at a 9, like feeling like it was getting a little bit out of hand. So has the prospects of what this new administration could bring brought that meter down at this point? Because it certainly feels post-election like it's a bit euphoric. And I'm not the one who's used that word. Others have, including Nelson Peltz today.
Yeah, I've talked about the possibility of a melt-up scenario. I mean, I keep talking about the roaring 2020s, but I give that a 55% probability. I would say 25% to a melt-up. Too much of a good thing. I think the Fed's making a mistake here, lowering interest rates and stimulating an economy that's already doing quite well. And that could very well spill over into the stock market and create a melt-up. I mean, look, valuation multiples, everybody agrees, are stretched. However, we've had this terrible recession for the past 3 years that just didn't happen. The most widely anticipated recession of all times didn't happen. It was reasonable to think it might, with the Fed raising interest rates the way they did. But if we didn't have a recession in the past 3 years, why should we have one over the rest of the decade? And the longer out you can see the economy growing, the higher valuations people are willing to pay. So that's what we're in right now. But yeah, I wouldn't dismiss the possibility of a melt-up scenario.
I mean, if you're raising your estimates for earnings for both next year and the year after, are you raising the multiple on the market as well, the price we're willing to pay for those earnings?
Yeah. Look, Scott, I've been bullish, but not bullish enough. When the market bottomed in October of 2022, it took us a couple of weeks, but we thought that was the bottom. And a lot of people said that can't be the bottom because the forward PE is 15, and that's ridiculously high for a bottom. But it turned out that was a bottom. And at that time, I thought, well, maybe we could get up to 20. And people thought that was delusional, and I wasn't delusional enough. It got up to 21, and now we're at 22. So, yeah, I did raise it. I think that these valuation multiples can be sustained for a while, as long as there's no recession that suddenly brings them down.
Going to get a rate cut in December, do you think?
I don't know, Scott. I didn't think that they should have done 50 basis points. 25 was enough for me back in September 18th, and I thought it would be none and done after that, but they just won't listen to me. They got their own opinion, and the reality is they did cut by a quarter, and looks like they still want to cut by another quarter, but the data just doesn't support that at all. And by the way, the bond market begs to defer, because we've seen the bond yield go up by 75 basis points as they've cut the Fed funds rate by 75 basis points. So my friends, the bond vigilantes, are trying to send a signal, no mas, we don't really need the Fed to cut rates.
Yeah, it's tricky because some would say, well, the CPI today suggests that it keeps the the door perfectly open for them to do that. And if they do one more and then wait, so be it, right? I mean,
Well,
what's the big deal if they do another one?
yeah. Well, look, it depends, what you're looking for in the CPI. You could find trouble there. And, I've been a disinflationist. I've been arguing we'd get down to 2%. But on the other hand, the super core inflation, the services, the core services, excluding energy and excluding housing, that's turned out to be kind of sticky in the CPI, right around 4.6%. And Powell is the one who came up with that concept, and now it's suddenly not very important. But Scott, to your point, it's not a big deal if they do 25 basis points in December. Just, I would like a nice leisurely bull market for the rest of the decade. Just because I do doesn't mean it's going to happen, and it could be a melt up, and the Fed could fuel a melt up. Look, what the bond vigilantes are saying is that we've got stimulative fiscal policy still. It might be more stimulative, and we don't need the Fed to create monetary stimulus, because then the risk becomes 2021 all over again. That the Fed's fighting, trying to keep unemployment down, and all of a sudden they get this huge inflation problem, as they did in 2022, 2023.
You do have a 10,000 target for the S&P by the end of the decade. So Here's to your bull market prediction. Ed, we'll talk to you soon.
Okay. We got the roaring 2020s. It is November 14th, 2024. What's up, Jewel? So, 2 nights ago, I recommended some quantum computing stocks. One of them shot up over 100% the next morning. Great. I guess I should just do whatever I say, but I'm not gonna play penny stocks. Shoot. Anyway, here's a chart. I'll show you some crazy news. I don't know. I guess crazy for a penny stock. They got a customer. Oh, they got a customer for their chips, and all of a sudden, it just jumps up like crazy. Not this one. Here, this one. Let's see. That was Wednesday, right? Yeah. So they got some news. Looks like, okay, it just goes up a little bit, right? 15%. That's not a big deal for a penny stock. This stock constantly moves up and down 15%. Then all of a sudden, it just gets more volume up here, keeps going. It tried to get the 3 from 1.5, so that's 100% move at one point midday. Now it's jumping up again. I have no clue, man. No clue at all. So we have earnings for another quantum computing stock, QBTS. Had it this morning. It was going up and down like crazy for the first hour. Now it decided to go up, so I'm guessing it picked a direction. So you got Qubit, QUBT Quantum Computing Inc. And last week we had IONQ. This one already moved up, broke out of resistance. So yeah, I think a lot of these things are making nice bases here. And we're just awaiting. This is another base right here. And this one has broken out. This one's more sloppy. The first two, QBTS and IONQ, are SPACs. This one was an IPO made way back when, during the 2000. That's a terrible time to start an IPO, right? 2008, the stock market's crashing. But hey, this is the biggest volume we've seen since this whole history this week. So let's see how much. 346 million shares traded on a penny stock. So guess what? I think liquidity's in the pocket, guys. We are going to see more. And, I personally will not trade these. This is crazy stuff. You're going to have to hand hold it. You're like, if you start trading it, you have to watch it like every minute or something, because, anything could happen. It's very thin. So when people stop trading it, you have millions of shares trading it right now, like 300 million over the whole week, which is abnormal for its usual volume. Once those guys leave the pool, then it'll just start crashing on its own because there's nobody lifting it. That's why, these are just moonshots. They're just lottery tickets, but they do give you an indication of the animal spirits. That's exactly why I put that video in front, because I was asked about animal spirits last time by Tropes. What are animal spirits? Okay. That term was defined by Keynes. I thought it was like Soros or Druckenmiller or some or hedge fund like uh, Paul Tudor Jones or somebody like that, but actually it's way older. It predates all of them. And this is the emotion of the market, right? You get this emotional drive. You see, before this week, the volume is so thin. When you see thin volume, you see how jagged the trading is, because the bid spread, the bid ask spread is so wide. It just goes like pop, 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 pop. It just creates all these gaps. So when you actually get volume, now it's cleaner, right? Now you get full candles here. That's because there's more liquidity. When you get more liquidity, it's easier to pump, especially when you have very little shares and float like these penny stocks. So that's why I've been recommending GameStop. GameStop, GameStop. It's itching to go up the way it's been acting. So I got in 23. I got some more in 25 because it's held. Now, like, it's got to get above 28 now to 30. If I see that by the end of this week and then Monday next week, yeah, I am really thinking we are ready to rock it. We are ready to rock it. Now, let's look at Bitcoin. So I warned that once it hits the 90 area, it's probably going to try to pull back to 85 again to retest. So it has to do like a 50% test of this whole move right now. See, mainly this one. This last one is kind of like overthrow, you see. So it made this range up to 90, and it likes round numbers, okay? It's psychological. People love round numbers. They love round numbers, man. Especially with Bitcoin, right? And it's so easy to get to a round number. So once we got to 80, right, we blasted off. So this move above 80 was about 9% within, I'm going to use 40 minute. Okay, 40 minute. Don't ask me why, but for Bitcoin, I like to use 40 minute because I just take 24 hours, divide by 6, you get 4 hours, divide by 6, you get 40 minutes. Okay. I'll talk about that some other time, not on this discussion. I just got to go through this stuff real quickly. So you got that 10% move about within 14 bars, 9 hours. Then you get this move here. Okay, I'm going to zoom down here. So 6.5, 5 bars. So that's 3 hours, about 3 hours. And then you get stuck real quick. Get stuck right here. And then you reverse, right? Go through 50% of this. Okay, that might be okay. All right. I mean, it's kind of dramatic. So what I want to say is let's compare it to how it moved before, right? You got this move when you first got out of the 67 area, the 69, you started climbing up slowly, okay, gradually in this upward move. Okay. And I think I'll get a cleaner one. Here, I'll clean this up for you guys. Let me do this one, okay? Okay. So this is a clean chart, and I'll remove the moving averages. So because I just want to show you just the chart. So just 40 minutes. And then you see this move right here, right? So once you make an up move, you get a gradual move up. And then you do a little bit more, and then the slope changes, right? Then you get a little higher. And then you move the last move up. Now, the problem here is what happened. It got a lot more violent because now you're starting to see bigger red candles like these two here, right? Move up, move up. Then you try to go up, and then it gets negated right away. Another red candle. Boom, red, 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 red. So with that, you could tell like this whole area is a lot more violent. So you're going to think to yourself, you're probably going to go sideways at least. Okay, now you're going sideways, right? You go down, you test this top again, you're going sideways. All right. And the interesting thing is that when you do this, like here, well, let me draw a line. I wonder if you can do an angle. Let's see. I never use these tools, Let's say this is a 58-degree angle. Now compared to this guy, right? This is shallower, right? So you can you don't need these rulers or anything. You can just eyeball it, right? You steep angle, slightly less steep. You test the bottoms here. You're gonna go up because now it's kind of exhausted its volatility. And I could use other like indicators like MACD or something. You could see the same thing, but I'm not. I'm just gonna say just look at candles. Just look at the slope. Okay, you can tell right away what's gonna do next. It's good. So now we break out. Right now we're trying to break out, but we get stopped real quick. And this point where we stop is a lot less than here. This move nicely about $10,000, right? This one stopped early. And not only that, you start getting this candle. That's not good. Once you see that, yeah, like, okay, it's probably going to try again to get up, but it's going to get weaker and weaker. Now we see another big red candle. Guess what? I'm just going to expect more weakness. It's just going to get weaker and weaker because these red candles are just killing the momentum. And eventually, this will result in a drop all the way back down here, probably to 80,000. Okay, it's just distribution. This is all just distribution. So when you just look at it on a Wyckoff, you would consider that distribution. So that's just the mini lesson for the day. That's all you got to do. And that's why I love these crypto charts, because it's just pure emotion and they don't have any closes. You don't have these big gaps where like it opens and closes every day like in the stock market. When you just look at crypto, you can just look at pure emotion. Everything just runs on psychology. That's when you just see these pure charts, and these are the best to study on, because when you can zoom out into different time frames, right? Here, this is just 40 minutes. I could just zoom out to a week, and I could just start seeing same patterns again and again. Like this could have been like a 40-minute chart, the same one, right? You run up, then you get these big red candles killing this momentum. Then you just try hard, just get back up here, but okay, almost, trying to get higher. No, you can't. Then you get the red candles coming back again, killing the momentum. And then you get this minor high, and then guess what's going to happen? You can't even get above 50% of this down, right? You're going to go down. That's it. So it's really easy to read them. And once you get the feel for it, you can apply it to stocks and other things. But the great thing about Bitcoin, because there's so much data and it's so emotional, that you kind of get an extreme feel of it. And stocks are kind of more subdued in general, but it'll make you read penny stocks and stuff easier. But the problem with penny stocks and all stocks is they close, right? They close and then they reopen. So people hate trying to hold overnight because anything could happen overnight. Now we're trying to get into 24-hour trading. So this might change the game with stocks. So a lot of the stuff you're going to learn in the crypto land, yeah, you're going to have to go in because everything is going to be turned into a casino anyway. So that's a quick lesson there. Now, let's look at the crypto stocks. So I told you guys, great time to buy up until here. And then I was warning, yeah, it's probably over. Now we got through earnings. We have Mara earnings. We got through that. We got the CLSK. We got through HUT. We got through Wolf. We got through Bitfarm. I think there's only a few left. I might add more into this list of crypto stocks just in case. But HUT had the best reaction out of all the earnings so far. So even though like most of the crypto mining stocks went down with a Bitcoin, because the thing with crypto mining stocks is even though Bitcoin did make a new high, and even though it lost its some of its peak it was still higher than the previous day. So how come did these crypto mining stocks pull back? These stocks run on momentum. That's what I found so far. And not only momentum on Bitcoin, but the NASDAQ. Not just like the NASDAQ 100. I mean the broad NASDAQ. So when you see stocks in like XBI, like here, you see that? XBI, the biotechs, and you see stocks in ARK. ARK's doing fine, but it's lost its momentum. When you see the momentum disappear, Mara already went like up 30-something percent, right? The previous Monday. And then you see it tried to make a new high, can't. And then the next day you see this huge candle go down because people don't want to hold it. People usually just trade these things. They're not holding these things, especially with earnings and all that. If you don't see Bitcoin keep on pumping, you need to have a clean pump on Bitcoin. You got to see a straight line up, direct. You can't just be pausing like this, okay? So I still think we have to pause for a while before we make the real push above 100K. Once you get above 100K on Bitcoin, that's it. This is going to 180, 140, 180 by April. I don't know how high it will go eventually, but at least 140, 180. If liquidity is real good into the first quarter, man. So a lot of these Bitcoin stocks, they're going to go nuts. They always love to go nuts. Yeah, I'm going to go over some other ones like the space stocks. Yeah, I got to go over the space stocks. Okay, that's the next one. So let's quickly look at HUT again. I think I'm going to bump this up on my ranking. So I'm going to have to rank all these stocks, re-rank them after the earnings. CLSK is the only one we haven't had earnings yet. This will come way later. And in general, I find it has better performance in earnings. So let's see. Now, MSTR, Coin, Hood, all these guys, yeah, MSTR broke the .com high. So that was $325 a share. Okay, so that's a big deal. So it's made a minor new high. I'm not sure if we got to get a pullback. Let me see how this goes. Yeah, it's going to really depend on this. And Dogecoin's all right. Dogecoin still hanging out there. It's doing fine. Still hanging out there. But yeah, I think most of the other ones we're not in altcoin season. Like the second, yeah, see Ethereum's still stuck. I think Ethereum Classic probably still stuck. Yep. Yeah. So don't need to worry about that. We're not ready yet. I think we got to clear out people by the end of this month, and then we can continue on for Christmas. But I think this is already too weak. This whole movement here now is, suggesting that the next time Bitcoin tries 90, it's going to try a little bit, catch a bunch of idiots chasing it, thinking it's going to go to 100, and that will be enough fuel to crash it back to 87. Once it gets back to 87, it'll just try again, probably halfway here to 88, 85, and then eventually it'll just collapse. That's about it. So maybe it'll be done by doing this by Monday, before Thanksgiving, so next Monday, but maybe it'll last until Thanksgiving, until the end of the month, because the way Bitcoin futures and options work, they expire, all their contracts expire on the last Friday of every month. That is unlike futures and stocks and index futures and index options, all that stuff. Those expire on the third Friday of every month. So there's a big difference there. So there's a gap between the third Fridays and the end of the month Friday, like if you deal with Bitcoin. So that's always a weird thing that happens. So yeah, remember that. Do you know? Let's see. Questions. You know, going to be government implementation of blockchain. I don't know. Yeah, I don't know, Jewel. I try not to go deep into it because a lot of them are very fickle. And many of the ones I've showed, half of them are owned by Canada. So yeah, that's another thing. All right, what's up? What's up? What's up, everyone? Okay, let's continue on. Let's look at these space stocks right now. Rocket Lab. So after earnings, pre-market it was around what 25%, post-market, and then it shot up to nearly 50% before now we're pulling back midday and all the way today. So I'm going to be watching this. If it can hold around 18, that's very bullish. But I wouldn't be surprised if it came back closer to 15, maybe hang around 17, 16 area. So I would be thinking about so if you've been playing this guy for a while, yeah, it might be a good place to add some. So if you didn't sell here already, I mean, I don't know. It's up to you guys. But yeah, this is a wild one, right? Worst case, it'll just drop back to 15, maybe 13 before continuing on. But it depends. Depends on how this month ends. So that's RKLB. And then we have Lunar, LUNR. It had earnings. It was up pre-market and market open. And then it just lost all of it. So, all right. I think this is a tough area to break out. This 9-10 area. So it's made this nice bowl shape thing. So I'll watch it. I'll watch it for sure. ASTS. It's going to have earnings after the close. This could be a good shape. The way it's moving, it tested that area of 20. Looks like it might want to keep going. I mean, yeah, man, it has no resistance now. It's finally broke out of the 2021 era. So, like I said, these animal spirits, they can be real strong. This sucker could moon. So ASTS has already done quite well from 2 something to $31, $32. Yeah. Pulled back 50% to $20, now back up to 27. So it's not something that it's safe to hold or buy, but hey, we're getting somewhere here. Okay, already covered these. And then the nuclear stocks. So I see now LEU dropped yesterday. It's going again today. So yeah, this is going to go sideways for a while. LEU, Centrus Energy Corporation. And Nano Nuclear Energy, we've already hit the top again, this local area. I don't know. I don't know what it's trying to do, but the way it's moving into earnings is apparently around Thanksgiving. The way it's moving seems bullish, could be bullish. So maybe the earnings reaction will be good and this can pop to 40 and then retest before continuing on. But this is a very new stock, right? Got IPO here. Man. I don't know. You got to put it on your watch list, though. If nuclear is going to be a big thing into next year, because right now we got pullback. Same thing with LTBR. Yep. So, yeah, we're getting pullbacks. We're going to have to wait for this to retest 6 again before we do. But, yeah, this is mostly going sideways. Once you have this big reaction down, it's going to most likely just stay sideways for a while because uranium itself with the miners are weak. So those companies I just mentioned, these are infrastructure companies. So it's kind of like the the natural gas companies. I just mentioned infrastructure companies. I think those are the better plays overall. We just have to get in at the right time for those nuclear energy. I mean, the nuclear and natural gas and all that. Yeah, this is not the right time. Just let this stuff play out. What we want to concentrate on from here into March are basically trash stocks, penny stocks. If you like to play penny stocks, like you see there, SPACs. We're already seeing stuff with the SPACs, like here, healthcare, Oscar. Now it's up 20% for whatever reason. I don't know why. Yeah, I don't see any news here. At least on TradingView, I have no clue. I don't have a Bloomberg terminal. I can't tell you what exactly transpired. And I don't really care. I don't really care about news. But you see here with Oscar, this 13.5 area was very important since February 2024. Tested it into March through April, moved up, retested it after earnings reaction was bad. It dropped back to 13.5. Now it's popping back up. So either this whole thing is something that will eventually drop and break down, or this is just building more energy to try to retake 23, and eventually once it takes that area, it's going to move on from 2023 up into a higher range. Let's see, the price history of this thing was around 40 when it first came out. Clove, competitor. I think it's pretty much a competitor of Oscar. I don't know. After earnings, pulled back down. I'm going to watch this. Doesn't look very good. It's below its resistance of $3.60. Hims, right? Generic maker, generic distributor, all kinds of stuff. So this thing does all kinds of things. Right now, I watched it. It tried to push up out of that resistance of 24, HIMS. Now it's back. So the diet pills, all the other pills, erection pills, I don't know. They got a whole bunch of men's health, women's health, fertility, all kinds of stuff. You go to their website. So now it's back at that area. I'm going to be watching. This could be the place to add, buy. It did its move in 13. Okay, when you look at the weekly candles, it did its move in 13. Look at the daily candles. It continued doing its move at 18. We're now at this resistance area. So I think next week I'll watch it. I think if it holds near it, yeah, I think that's good buy too. So keep that in mind. Now, I was telling you, look at trash. What trash do we have here? Solar stocks, Nova, NOVA. So it dropped below it. I don't know if it's trying to make a bottom, but as I mentioned, a lot of these type of stocks will go down into New Year's because people are just selling to get the tax losses to offset their tax gains. This could be a bottom though, because it's already penetrated through the lowest low. So anybody that bought there got scared and sold for a loss here, already gone. So this solar stock could be tradable. I'm not talking about like this is good for the long term or whatever, if you believe in solar energy or not. I'm not talking about that. What I'm talking about is just a trade, because this could have a quick reaction back up to 6 before selling off for the rest of next year. So that's going from 3 to 6. That's 100%. Don't know what's going to happen, but watch it. Other stock is Zim. Zim today was up for some reason 7-8% before pulling back, but I think we're at a point where this is a breakout. I've been buying it since 24 and then again at 18. So if you look at this stock long term, it's been building a lot of energy at this area, because once it breaks this resistance here, right at 23, it can fly up to 50. I already did my computation, so it's about 50 and 60 at this point, because I my old price target was around 40 to 50. Now it's like 50 to 60. It used to be at 90, but I don't know if it's really gonna get that high. Okay, yeah, I don't know. I don't think so. But yeah, who knows? If you want to hold it that long, yeah, maybe. But yeah, we'll take it at one at a time here. All right, going back to GameStop. Let's see what we got here. Yeah, it's holding. It's doing a lot better than here. This is when I sold. So when I was playing this up and down, I was hoping, because I was buying here at 25 Once I saw it break out at 28, I was like, all right, let's see what happens. But the next couple days, it started dropping back, went back to 25, and I'm like, all right, I'm out. Yeah, once you see this, it's this candle here, and then this response, like the next one didn't even negate whatever it did here. It's just like, whoa, yeah, this is going back down. So yeah, it went back down to the bottom of the range when it started. So this point from 18 to 64, right? This is the area here you're watching. Everybody's trying to fight here. Anybody who got in April 2024 before whatever the kitty cat guy was doing his live streams and started like shilling it, yeah, that was done. All this play was done. It's done. It's done. It's done. Now we're back here. Oh, Roaring Kitty, right? That was his name, Roaring Kitty. This is a lot better. Look at the way it looks now compared to here on the daily. Now, if next week we get a confirmation weekly candle that is moving up, I might just keep buying. I'll keep buying until it gets all the way back up to 65, because when you look at these stocks with quantum computing, all this stuff, there's a lot of liquidity. There's a lot of money keep flowing around. This is where it's at. This is where it's at. All right, guys. This is where it's at. And especially when you got the crypto mining stocks doing the same thing. Keep your eyes on this stuff. So we'll see what happens tomorrow into Monday, if I'm going to jump back into crypto mining stocks and all that. But yeah, I like what I'm seeing so far. Oh, and KC, this sucker, this Chinese AI stock, KC. Oh man, I don't want to play this thing, but the way it keeps acting is like I gotta play this thing, at least for gambling sakes. Like, so I'll put this in the gambling category where you're just like, the way it moves is insane. I have no idea. Sometimes it'll act like the other Chinese stocks, because the reason I mention this is because we're starting to get big earnings from China right now. So JD.com, ticker symbol JD, already reported it's down. Billy, BILI, it's down 13%. We got Baba tomorrow, big boy Baba, BABA tomorrow morning. But KC, Kingsoft Cloud Holdings, I have no idea what they exactly do or if they got accounting issues. I don't really care. The way it moves, though, like it defies China. It just defies everything. Oh my God. And we're getting a lot of volume too, comparatively, compared to what it's been doing before September. I'm gonna keep my eye on it because it broke $4. It broke $4.20. That's meaningful. Like, and maybe it'll try for 8, right? And then it can go even higher than that, because it used to be like a $64, $69, $70 stock. Yeah. Is it gonna go back up there? I don't know. Yeah, just get it. Just keep it on your list. You guys like to gamble? Here you go. That's a gambling stock right there. So there's a bunch of them. Now, my other gambling stock, I gotta get this thing, SMCI. So I bought a bunch this morning. So what happens is that I first bought it at what here? 28, and then 24, and then 20. Once it went back up here, I just dumped everything. My 28 position, my 24 position, and then some of my 20 position to offset the losses here. And then I just kept a bit for the rest. Now it dropped again. So then I was like, all right, buy some more back. 21. And now it's at 18 in the morning, right below 18. So I bought some more there. So I'm going to have to watch if this thing gets back up to 20 by next week. So all the bad news is already out. We've got, like, it can't finish filings Okay, so that's done. You don't need to wait for the weekend to find this out. So that news is done. So all that bad news is already baked into the cake. So now what we're waiting for is if the NASDAQ will allow them to extend their deadline for another, I don't know how many months, but they're going to extend it to try to find a new auditor. So that's what it is. So if the NASDAQ says, fine, we'll let you extend it again because you lost your auditor, we'll give you time. If that happens into NVIDIA's earnings next week, that'll be easy because since all the bad news is already out, we got as much bad news as we can, and we still didn't drop because I was expecting every bad news would drop this back to 10, and we're still not there yet. So I'm going to give this some more rope and say, all right, I'm going to willingly put my neck in the noose here and assume that this is a good buy for a quick flip into NVIDIA's earnings, because what I've heard yesterday from Samantha LeDuc, so you can go to her channel, like she's the one I've been recommending people if like they got a lot of money. If you got a lot of money and you just don't have time to be studying this stuff yourself, yeah, she's a lot better than me at picking movements, and she can do options and all kinds of stuff because she has a whole team around her handling things. And also crypto and things like that as well. She has a young group of kids handling that with the Discord. So she's really good at managing and doing the whole macro to micro analysis. She's the queen of it. Okay, I've recommended her before. So I'll put this in the chat. So yesterday I was watching a presentation by her about what she thought going into NVIDIA's earnings, and I think she'll post it publicly in a few hours from now. Okay. Once she does that, I'll go over what she says. So yeah, you can go to Samantha LeDuc Trading. That's on YouTube. So she'll post it there. Once she posts it there, I'll present it here, and I'll go over it with you guys. And she has a new options person, so she does a lot of this options, and he does a lot of training. So I don't know if you guys got money, that's probably for the best to go over there for the experience. Oh yeah, I have no clue what's the best laptop, honestly. I think that's really, a lot of that, Antoine, is gonna be like, what's the resolution of your screen? Maybe people will not like it because otherwise, if you just put it in a dock and then connect it to multiple monitors, then that's okay. But if you're just like trying to say like, oh, I just want a laptop and trade it on my laptop without hooking it up to monitors, then that might be a problem. Because if the resolution is so low, because a lot of I have the Lenovo that has a really HD resolution. It kills most of the battery life because it has to power so many pixels, but I like it because it has a cleaner look. I hate it when you get a fuzzy looking chart, and you have to consider that. Yeah, what kind of graphics card code goes in there, what kind of resolution, what kind of monitors it can drive. I think that's more important for a day trader. Because you're gonna have to. I mean, you don't need multiple monitors, but if you don't get multiple monitors or something like that, you rather have something that can have high resolution. You don't want something that looks fuzzy. Like even here, because StreamYards does 720p. When you do, 720, maybe it's not even 720p. I think it's 720i. It's interlaced. So if you go to Streamlabs, you see it's way crisper, right? So Streamlabs, we don't need to pay extra money for the 1080p to come out when it's HD. Man, there's a big difference. So when you're looking at charts, dude, when you're looking at candles, you don't want your eyes to get all like fucked up, man. Yeah, take care of your eyes. I think that's most important too. like staring at this stuff is like hell. So if you're gonna do day trading, yeah, just look at resolution. That's probably more important than most people's stuff. All right, let's go back to Oscar. Like, I have no idea why this thing is moving up. Let's see. Is there any? Yeah, still no news here on TradingView. TradingView really sucks at this news stuff. Yeah, man. I'm sure Thinkorswim probably better. Oh, here we are. Thrive Capital's $14.4 million bet. Oh, all right. All right. So that's why it's moving. Okay, whatever. But yeah, keep these on your list. I definitely have to continue looking at these. Okay, any other stocks I did not cover yet? I covered that. Okay, I covered everything. Let's look at some videos. Guys. Yeah, you can go blind with bad things. Here's some Wyckoff stuff. Let's take a break. Quick video here.
Here we clearly see the demand tail, which suggests that demand comes in, it actually overwhelms supply at that point. So maybe the same pattern, like where we have an attempt to go up, maybe a couple of bars like this, and then a down bar, and then we still going up. Just because from, let's say, like this to this to this to this, where it's still improving. So we have to have some kind of continuation that will start deteriorating the price action. And then here is this overbought condition. And not only can we come to the overbought condition, we also can overthrow that condition like we did before. Most immediate target is probably 100, just like a psychological target. Usually when we come to this type of targets, they're being overshot in a strong market. So it's not going to stop at 100. It's going to come to 100, maybe react a little bit, and then go through it. And in reminiscences of a stock operator, this concept has been described so many times.
Okay, so he mentioned very quickly at the end there, I don't know if you caught it with his accent, reminiscence of a stock operator. So that's what Wyckoff wrote. That's one of his books. Reminiscence. Let me see. I wonder if he wrote it with his name or his pen name. Oh, it wasn't Wyckoff. It was Jesse Livermore. Yeah, they were around the same time. Those two people. Yeah, reminiscence of a stock operator. You don't need to read these old books. I mean, this really historical, but the concepts are like the same. You know, if you want to, that's up to you guys. You don't need to. So here, reminiscence of a stock operator. So that's Jesse Livermore. That's another one of those famous people. And these guys were living back in the roaring 20s, you know, all these roaring 20s, the bust and booms, great depression, shit like that. So that's 100 years ago, man, right? Okay. But yeah, let's see what Bitcoin's doing now. Let's see if it's gotten what the chart looks like. Man, it's still looking. You can't even get back up to 90 at this rate. So I'll go 40-minute. So once you do 40-minute, I divide by 6, I get 7-minute chart. Yeah, I think it'll try to fight. It'll try to fight overnight, try to get back to 90. But apart from that, yeah, I think it's going to go down again. So hold off on the CLSK, Mara. If you're waiting to rebuy that stuff, hold off. The other thing was silver, gold. I think we've hit a bottom for now because EXK is up 5%. So I like that. So it's found a bottom near 4. And then KGC is the gold miner I prefer. It still hasn't really bounced off of it. It's going to try to hold 9. The GDX, the ETF that has all the gold miners, yeah, we're at a point where we're below that range. 36, 37. Yeah. So it's going to go sideways. I wouldn't try to put my money back in there because, like I said, there's a lot more opportunities in other things. If you have the money, you can start rebuilding. But yeah, I think there's a lot more opportunities. Like, I'm waiting for lithium to push back down. I think the way it looks right now, it's going to push back down. So this is PLL, LAC, lithium. Yeah, the way it's looking, I don't like these looks. It's going to push back down for sure. SGML did a really good pump yesterday, but it reversed that whole thing. This is not a good look. This means we have to pull back. And, these commodity-driven stocks, gold miners, lithium miners, they move quickly because they have to follow with the commodity prices. Commodity prices are not forgiving. They go up and they drop really quick once they find a top. When they can't find any more buyers, they just give away. So yeah, watch for retests in the lithium. And we already did that with uranium. It made a minor high and now it's pulling back, right? I think copper also, yeah, copper, COPP, that's the ETF. Yeah, you see it just drops again. COPJ, junior copper, yeah. Nickel. Yeah, we got to keep waiting. We got to keep waiting for this. PLG, I think, is platinum. Yeah, we're almost in December. I think platinum will be the way to play into December. I think platinum will be first to recover. Maybe. I'll have to relook at it. The cycles and all that. All right. Marijuana was the last thing I want to talk about. So Matt Gaetz was appointed to be AG. So the day before that, we had Chris Christie talk about, yeah, Trump's going to be pretty light on marijuana. He's going to be pro marijuana. And then it reversed this whole loss on Monday for some reason. I don't know why Monday it dropped. We already had the election dump for American weed companies. Most of these weed companies, I think all of them, are in the penny stock era. I mean, they're on OTC. They trade OTC. They're not traded on NASDAQ, NYSE, okay? So you can look these up yourself. But I use the ETF MSOS, MSOS, as a proxy. So you see this move here. This is perfect, right? I mentioned this where you see this last point, this last resistance. You drop and then you recover right back to it. This is very bullish on very high volume. That means it's ready to spring back up. And the last highs were around 10. So you can see this 5 to 10 move. If you're more aggressive, we can use MSOX. MSOX is 2 times MSOS. I don't know if it's going to be a straight line up, but you see MSOX is like below $1. You can go $1 back to 8, or at least 5. I don't think it's going to be directly at 8. It's not going to overshoot it. So let me do the percentage here. So we're over on here. Let's say we get back around 122%. Okay. So 2 times that, 244%. All right. So it's probably going to be around 80 cents to 3. Not bad. So it'll be around here. Okay. So 80 cents to $3 if it's one straight line. If it's not, if it's just jug, you don't want that. You're doing these leverages. Yeah, you don't want that. I'm not sure how the options market looks for MSOS. Maybe it's better to play options with this ETF if there's a lot of volume. Okay. So yeah, look at those two. MSOS is the mainline ETF, and if you want leverage, it's MSOX 2 times. So my thinking is below $1. So we're at 80 cents right now. It can go up to about 3, maybe 3. If things go really well for marijuana with Trump, you know, it can go higher. Maybe it can go back to these old highs. 200%. So that's 400%, right? 2 times that if it's straight line. So about $4. So 80 cents to $4, maybe if you get lucky. So yeah, keep those in mind. I think there's a lot of things when you have a juiced up market, people are looking for smaller areas. All right, SMCI, let's see. We're retesting this point here. So this is a big significant bar for the day, right? This one here at the open. You see this move up, test, pull back. Now, from today's close, you want to see this right back up at 19. And then the next day, it's going to go up to 20. That's about it. That's what you want to see for SMCI. So if you got that below 18 here, yeah, I would probably sell some at 20, keep the rest, try to see if we can make it back to 25, and then eventually back to 40 and 50. So that's my target there for NVIDIA. And from what I've heard, is all I'm gonna go by is from her opinion. So Samantha, her opinion right now is that it's a good time to get back into semis. Okay, I played the video with IGV software stocks taking the lead for the NASDAQ. Now we're going to return back to semiconductor stocks. So now we're going to watch where these semiconductor stocks are going to go. So I'm going to be looking at buying SOX L. Okay, leverage 3x. SOX L. I'm going to buy this again. It's right back here. See, you would have sold here, right? You would have sold here. Because if you look at it, like you can use SOX. Okay, here, look at it. Look at this. Look at the MACD. Okay, here. I'll show you the MACD. See, this is the MACD. You got a high here. You got a higher high here. This is October 30th before Halloween, November 7th after Trump got elected. Okay. But here you got a lower high. The price made a lower high. So that's your divergence right there. Okay. That's your reverse divergence. That's why you see it goes down. So that's one way you could tell that it's going to go down. But honestly, you don't need that. I mean, you can see like, oh, it's at resistance. You broke resistance. You fall back. You go up to into resistance. And this green line is very important. You know, I've been drawing this since here. So I have all these lines up here for a reason. So you keep drawing these horizontal lines. You can see like, yeah, you did this. You fail. You fail to hold it. Of course, you're going to drop. You do this. You run right into it. The next day, you just kind of go whatever. And then that's it. You fail on Monday on bad news. So it's not a surprise. None of this should be a surprise. Okay. Now, if we're going to NVIDIA, NVIDIA is the top semiconductor right now. I'm going to be watching this. You're going to get in Friday, Monday. You can trade that. We're at this point here. We can trade that for NVIDIA. If NVIDIA pops up, it can take the NASDAQ up. SOX L will take over. So that's the game plan. They'll take it over temporarily into December. I think, yeah, that's how it's going to go. Now, if we look at small caps, it's trying. It's not going to work. XBI, same thing, I think. Yeah. So it's inconclusive. We have to get through Monday. once we get through all this option stuff, it's going to try to kill all the options. I have to see this thing confirmed. If I don't see it confirmed, then no, I can't believe that all this trash that's been going up so far, like the quantum computing, the space, man, they're all red again. So ASTS will report. Yeah, I don't know. Rocket Labs will probably pull back. So yeah, I wouldn't trust anything. Oh, there's another penny stock, TMC. This thing does underground mining. I mean, undersea mining. Okay, TMC, the metals company. Penny stock. I'm curious to see if it can break out of 1 again and try to go for 2. This thing's been a range for a while. This was during the whole move to 3. Yeah, this whole move to 3 was probably, yeah, I forget when the whole Ukrainian thing, was this the move to 3 because of the Ukrainian thing? Yeah, I don't know. One of these big surges here. Yeah, I'm not sure. I'm not sure if this was actually the surge that took it up there. But yeah, at one point it was $3. I don't know. I don't know if it was because of the Ukrainian thing. Because yeah, this is nickel mining and a bunch of other stuff. Yeah, somebody just recommended this thing to me and I was like, all right, I'll take a look at it. But yeah, it's been range bound. So I'm going to be really curious about now with Trump and all that, if this thing can actually do anything. Penny stock, put that on your list. Never know, never know. All right, that thing's still there. Now CLSK is down 6%. Yeah, Mara is now well below $21. $20.80. So yeah, I'll keep watching these. I'll have to see when I'm going to re-enter them. The Bitcoin mining and all that. Into Monday. I think I'll have to wait until Monday. Mobileye. Somebody mentioned Mobileye because it was going with Lyft. Yeah, Lyft is still up there from earnings. Mobileye will probably pull back. So yeah, if this is a real base, Mobileye, MBLY, yeah, I'll keep an eye on it. Maybe once it hits 14, maybe that's a buy in that area. All right, let's go. So it's about 1 hour. Let's end it with some more videos. I got some more videos. Couple more, a few more.
The energy agenda look like under President-elect Trump's new administration? Our next guest says while there are some pros, there could be some cons as well for the oil and gas market. Joining us now is Bill Perkins, President and CEO at Skylar Capital Management. Bill, you just heard Pippa's report about this kind of balancing act that we're seeing between green energy and traditional hydrocarbon energy. The presumption is that it's just all oil and gas, drill, baby, drill, and that's basically it. But it's much more nuanced than that.
Yeah, I think this incoming administration is pro-energy of all kinds, whether it's nuclear, renewable, natural gas. And so any type of energy delay or delaying the United States from producing any type of energy, they're looking to remove those delays, those bottlenecks, and those frustration points. And so we should see that happening very quickly. I think the first time this administration came in, it took a while for them to get their feet wet, to understand how things work. They now understand these frustration points, and they're looking to come in, hitting the ground running.
The markets have already made at least a near-term verdict, right, Bill, on this. We've seen clean energy companies like solar companies see their stocks relatively lower, and in many cases absolutely lower compared to oil and gas stocks. How exactly do investors navigate this kind of environment? Are there relative value trades, and how exactly do you position portfolios to allocate to all different kinds of energy?
Well, let's go by sector. So these companies, I think people are worried about the incentives, the Inflation Reduction Act, those type of things going away. I don't think that'll be the first thing. I think the first thing will be positive for them. think the first thing will be positive for them. Whether you produce solar panels or transformers or any kind of renewable product, you have to get a permit. And the biggest issue we have in the United States of America is the permitting times are too long. There's a wing within the EPA and within the government that is basically a anti-development of any kind of energy source, and that is hurting along the value chain in renewable energy. So I think they're going to actually benefit to begin. And there is some odds that the IRA gets reduced or something happens with that. But I think the main bottleneck for energy production in the United States of America is the weaponization of the permitting system. For crude oil, on the other side, I think the current administration has kind of turned a blind eye to some of the sanctions violations. They're not really big on enforcement. We're big on handing out naughty boy slips. And we know where these sanction violators are going, who they're meeting up with, et cetera. And so the enforcement has been a little lax. And I think this new administration is going to take a much tougher stance on enforcement.
Bill, I want to ask you, the administration has Trump has reportedly considered an energy czar who would kind of go and unwind a lot of the Biden kind of climate rules. At the same time, some of the business leaders, I believe it was Exxon, was maybe trying to communicate to the president and say, look, if every 4 years we go totally in one direction and then totally in another and then totally back and forth and totally, it's hard to be able to invest in projects with clarity in the long term. And obviously, if we want low energy prices, we need to know, and have people put capital to work over, 10, 20 year period of time. Do you think there's some truth to that we're seeing too much volatility, or do we need to turn a page from what took place during the last 4 years?
Yeah, I think, everybody wants clean air and clean water. And I think the people coming in have kids and families, et cetera. What they're trying to get rid of, the obstructionist attitude, the inability to use electronic communications using snail mail, the deliberate attempts to slow down reasonable permitting. I think that's the part where they're going to come in and rip things up and roll things back. As far as like on the legislation side, on the EPA rules and Clean Air Act, I agree with the CEO. You want stability. Stability breeds investment. And we want the rules to be followed. We don't want obstructionist wings within the government, even though you have the cleanest renewable plant, but they are slowing you down where permitting times that basically destroys your ability to bring this facility on, whether it be solar or wind or hydro or geothermal. And so I think there is a balance that needs to happen and some stability that needs to happen. But currently, the incoming administration is set on blowing up anything that is obstructionist or weaponized.
All right. And permitting sounds like it could be one of those first avenues to it.
Box, the Department of Homeland Security unveiling a set of recommendations for the safe development and deployment of artificial intelligence in America's infrastructure. The framework was developed with the help from the newly established Artificial Intelligence Safety and Security Board. It was chaired by the Secretary of Homeland Security and populated with some of the top CEOs in business, including OpenAI's Sam Altman, Microsoft's Satya Nadella, NVIDIA's Jensen Huang. Joining us right now, first on CNBC, is Secretary of Homeland Security, Alexandria Mayorkas. Good morning to you, Mr. Secretary. Thank you for joining us. It's a fascinating effort to try to regulate or at least put some guidelines around where AI is going. At the same time, of course, this is the end of this administration. And so I sort of have a double-barreled question, which is to say, what is the significance of this and where you see this going? But also, what is the significance of this in the context that a new administration is coming into office in January?
Andrew, thanks so much for having me. So let me be clear that these are voluntary guidelines. They are not regulations. In fact, if companies throughout the AI ecosystem adopt and implement these voluntary guidelines, we can ward off precipitous regulation or legislation that can stifle America's leadership and innovation. The guidelines are groundbreaking in two different regards. Number one, and one you referenced at the outset, is the breadth of membership of the AI Safety and Security Board. We have brought in not only cloud and compute infrastructure providers, AI model developers, the companies that own and operate critical infrastructure, but we've also brought in civil society and the public sector. It's a remarkable expanse of participants on this board, number one. And number two, it sets forth a model of shared and separate responsibilities. Everyone in the AI ecosystem has a role to play and has responsibilities to assume and execute to ensure the safe and secure deployment of AI in critical infrastructure, which is our water, our energy.
The big details, though, of what these guidelines look like. There's been lots of questions about sort of these various roles, you know, a large language model that's closed, like an OpenAI version, versus you know, an open model that almost anybody can get, but then it appears from the guidelines that some of the cloud providers where these things would sit would also have some of their own guidelines around these things. How would it work?
So this is really an overarching architecture that we hope companies throughout will adopt and implement, and each one has its role to play, and we identify the different responsibilities. If it's a cloud and compute infrastructure provider, making sure that there's the access to that infrastructure is safe and secure, so it's not, in essence, polluted. The model developers in making sure there's data integrity. The critical infrastructure operators making sure that they're testing the systems before deploying, because the consequences can be incredibly advantageous on the one hand, but the risks are real on the other. So those are some simple examples.
What do you think this looks like as there is a transition? I recognize these are only guidelines, but to the extent a new administration comes in, potentially with either new, different, or other alternative priorities, where do you think this lands?
Well, it is our hope, and the members of the board are committed to it, is our hope that companies and organizations throughout the ecosystem adopt and implement these guidelines. It's going to advance the safety and security of the entire enterprise. This is not a regulatory regime, and it's not a legislative regime. It is a voluntary framework, and we hope that it's really accepted and adopted throughout. It will also critically drive harmonization. What we can't have, companies suffer so much if there's a patchwork of regulations that control them, and it's so difficult to comply with sometimes regulations that are either in tension with one another or sometimes directly conflict. We're hoping this adoption and implementation is not only domestic, but international as well.
Mr. Secretary, while we have you here, you know, we've seen the results of the election, et cetera, and the border, and it became such a flashpoint and such a front and center issue. And one of the questions to Vice President Harris was, would you have done anything differently? And I don't know whether that affected the outcome, but just in a word, and I know that you serve at the, you know, at the, whatever the president asks you to do is the way that you serve. But do you think that there should have been anything done differently over the past 4 years at the border? Do you think things could have, the election outcome could have been different? Anything that you would have done as an individual differently?
Well, Joe, I'm not going to speculate about electoral outcomes, but I can tell you this, that the model that we have in place now have driven the number of encounters at the southern border down below 2019 levels, the last year before the pandemic struck our country and the world. We're facing an unprecedented level of displacement of people around the world. We have actually built an architecture now that is proving tremendously successful.
Right. It was more recent than, I think some of the damage had already been done, Mr. Secretary, just with all due respect. Anything prior to that, like from the inception of the administration, that could have been done differently? That it was something that a lot of people just, I mean, it became a major flashpoint in people's thinking for the election.
No question, it did, Joe. And remember where we were. Remember where we were up through May of 2023. Everyone across the aisle was really supporting the continuation of Title 42, the public health order, not an immigration measure, but a public health order, because we were still climbing out of the pandemic, more rapidly than any country in the hemisphere, but nevertheless still encountering it. So remember what the push was until May of 2023. And then what the administration did was correctly push for more funding for the Department of Homeland Security, as well as the only enduring solution, which is legislation to fix a broken system.
Mr. Secretary, we're out of time. How do you like Governor Kristi Noem, your potential successor?
I am going to focus on a smooth transition and ensure that she, if she is indeed confirmed, has an understanding of the challenges we face and a good understanding and grip on the tools and capabilities we've built to meet those challenges.
Okay, we're out of time. It's a longer conversation. I hope we get to continue to have it with you. Secretary, thank you for joining us this morning.
Okay. I didn't expect to go through all that. I just wanted the AI stuff. I didn't want to talk about the damn immigration. You know how it is. Blah, 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 blah. Lip service. Anyway, let's go to, well, since we talk about immigration, you might as well see this thing here. This video caught my eye. This is out of the scope of today's stuff, but, you know, I thought this was quite interesting.
How have you reacted more recently to the unrest on campuses, particularly last year, well, earlier this year, and the demands by one of your constituencies, and you have quite a few, students in particular, to divest? And what is the approach that you've taken, and what can you share in terms of best practices, perhaps, with some of the people in this room?
Thank you for having me.
You're welcome.
I'll start with the answer to your question and then go back.
Some of you asking, like, who is this guy, right? Why am I showing this guy? This dude probably influenced a lot of your stock movements more than any other dude. So let's continue.
The values and principles that helped me with finding this approach. Of course, it was a difficult time over the last year and a half or so, and my approach has been that when students want to have a conversation with you about something that they'd like you to do with the portfolio, you engage with them. And so one morning before the board meeting, I was out walking at UCLA's campus, and there was a tent, and they were on loudspeakers asking for the chief investment officer to divest. And I walked into the tent, and they didn't know I was there. And that continued on for a little while, and then eventually I had to tap on their shoulders and say, the person you're talking about is me, and I'm right here, so let's have this conversation. So that was a little shocking.
To them.
To them.
Yes.
And we had a conversation. I gave him my phone number, my cell phone, and my email address, and I said, call me. And this was in the early days of the conversation. 4 months later, we have a board meeting, and it gets disrupted, and I'm in the board meeting at the start of it. And so I walked up to them and I said, look, let's have the board meeting, and we'll come back and have this conversation at the end of the board meeting, if you don't mind. And they agreed for 2 minutes and then disagreed, and we disrupted the board meeting. At the end of the board meeting, I was asked specifically by the campus police, the leadership, do not meet with the students for the disruption that had taken place.
Okay, let me give you more context. This is so fascinating to me. You know, this is a representative of what is going on in America. You have a lot of these Canadian Indians coming in here, taking a lot of middle management positions. And I'm sure there's a lot of Chinese, Canadians, Australians, and whatever that do the same thing. They come to America after they get citizenship in an ANZAC country, New Zealand, Canada, Australia, a lot of these countries, and they come here and take a lot of middle management positions, and they move up the ranks. And so this dude here, Jagdeep Singh Bashir, is a Canadian manager. He currently serves as the 12th chancellor of the University of Waterloo in Canada since 2024. But he also is the chief investment officer of the University of California since 2014. So you have to understand, with the stock market, a lot of it is driven by pensions. So I keep hearing a lot of people talk about, like, oh, Blackstone, BlackRock, Vanguard. What else? There's tons of them, right? They control your 401k and do all this and that. Now, when you do your 401k, what happens is you give up your right to vote. You have the performance of those stocks, but Vanguard, BlackRock, all those companies that run your 401k, Fidelity, anybody, they vote for you. You can't vote on those shares that they have. They vote for you. So they remove your voting power in the company. So as a person who owns shares, like the same thing with ETFs. ETFs is another way they'd remove that power. You buy an ETF, you can't vote. You're not voting for anything anymore. They took away your power there too. So a lot of people do not buy individual shares of stocks anymore. Most of them are in 401ks through mutual funds, ETFs, and whatever, right? Retirement funds. Though that power is stripped away. And so people like this, Jagdeep, take over. Pensions, right, was the original way of doing this. When you do pensions, they don't have a right to vote. My dad has a pension, right, with the California pension employees. They don't have a right to vote. These people vote for them. So they allocate the money to whatever stock and bond and any other private investment entities and things like that. They do it for you and they vote for you. So they decide. So he has two positions now. He is the chancellor of the University of Waterloo and the chief investment officer of the University of California. This is quite lucrative. That's a lot of power. And Canada has a big pension program too. So I would not, be surprised if this guy takes over the pension system in Toronto, the largest pension system in the world, almost behind Denmark, Sweden. A lot of the Nordic countries have even bigger pension programs. But these people control many billions of dollars, up to upwards of trillions of dollars. And these trillions of dollars result in voting. How many shares you buy controls how many votes you buy. It's not like a democracy, right? I can't go to the United States and be like, well, I own a lot of land, therefore I should get X amount of votes per acre. But this is how it works in the stock market world. So I can control who's in the board, who's in this or that, who's the accountant. I can control a lot of things just through voting. Anyway, he previously served as Deputy Chief Investment Officer and Chief Operating Officer at Alberta Investment Management Corporation from 2009 to 2014. Okay. So let's see what education he has. Oh, he graduated from the University of Waterloo, Bachelor's of Applied Science and Mechanical Engineering, Master's of Applied Science in Management Sciences, a PhD in Management Sciences in 2000. Okay. So he has a lot of stuff. Now let's look at his University of California role here. In January 2014, Bashir left AIMCO to serve as Chief Investment Officer and Vice President of Investments for the University of California. This office is responsible for managing the University of California's investment portfolio, which grew to over $80 billion at the time of his appointment and has since increased to $169 billion. He manages the pension, endowment, retirement savings, and working capital investment pools of the UC system, reporting directly to the Board of Regents on investment matters. During his tenure, he implemented strategic changes, including enhancing transparency and responding to stakeholder concerns, particularly around socially responsible investing. Okay. So now you understand how the world works. All right, guys? You have to understand how the world works.
When every one of the leadership left, I went to the students, missed my flight to go back home from LA to Oakland. And I said, I'd like to meet with 4 of your student leaders. And I did. And
Why?
in the meeting, because in the meeting, I said, I appreciate getting the letters from you, but let's have a conversation. This is a difficult conversation to have. There are no clear answers. There are no easy solutions. And clearly, I can't solve all of these issues, whether it's fossil fuels or affordable housing. And the list goes on, by the way, in California. Don't be mistaken with the color I'm wearing today. And
the shoelaces.
And the shoelaces. So the myriad of issues require engagement and conversation. And in that conversation, I said to the students, I recognize you from 4 months ago. And they were shocked. They said, really? I said, well, I gave you my cell phone number. You never called me. And I think in there lies the issue, in that there's a lot of noise, there's a lot of conversation, there's a lot of name calling, and there's a lot of accusations. But when it comes down to having a peaceful discussion, one-on-one, to understand where one side is coming from, and having them understand the challenges or the things that you can do, you begin to have a better dialogue. And it's in that meeting that I said, send me a letter, make a clear request of what you're looking for. And that led to a conversation that had a letter, and then the letter basically said I should divest from everything that had any association with Israel. And they wanted full transparency in the portfolio. So
All right. So the thing I do is the multi-time frame analysis. I kind of alluded that over many times, and we're gonna have to go over it in a tutorial thing. I wanted to do it over the weekend, but I got sidetracked trying to run the streams overnight again. When Stanley wasn't there, he was getting way too tired. So I'll get back to that. So I need to do some tutorials, and then we'll continue on with the cycles. We have to add the cycles in there, and then later on, the last final touches is the mark indicators, which is very advanced. I think once you get the cycles, you got the multi-time frame, you got the Wyckoff, and then you add in the DeMark. And with the DeMark stuff, I gotta pay for a subscription on the Symbol Link website. So that's run by Tom DeMark's son. I'll have to get that, try to understand what it's doing there, incorporate that in, and then once we do that, it's very good. I think my thinking is that once you have all those ingredients together, you'll really know what to do. But that's just a pipe dream of mine. Maybe that's vaporware, but if we do that all together, that's the best way to analyze it.
Full transparency in the portfolio. So at the next meeting, I gave him full transparency in the portfolio, but I said, if you'd like me to follow what you've asked me for, then I'd like to sell everything we own in U.S. Treasuries. And they said, why? I said, well, that's 32 billion of 188 billion, and we are the biggest backers. And that's where they said, okay, we'll have another conversation with you. And after that conversation, we've had a lot of constructive dialogues. And candidly, I haven't felt the pressure in my office, which is very odd to say because I tend to be the target for these things, right, compared to the rest of the environment. And so I feel that that is because for the last 10 years that I've been in this role at the University of California, I have firmly believed one thing. When you come to a university and you're a student, you're in there to learn from your professors and your faculty. But students also teach the faculty and the staff, just like our kids teach us every day. And we need to learn from them. And if we need to learn from them, then they become the early warning detection system for our office. We're only 52 people managing $188 billion. It's impossible for us to know everything about every issue that's either today or arising. And so in that conversation and an open dialogue and open access and transparency comes trust. And I do that at a grassroots level. So when these situations arise, we can at least engage on the discussion. Now, this sounds so simple, but the difficulty is to actually do it, because the time it takes, probably 25 to 30% of my time. And you know what?
And that was not time that you had allocated previously.
No, but you know what? It's important because it's more important for me to spend time on my campuses with our students than to be at an interview at CNBC. Because when the issues are tough, that's my customer base.
All right. We heard that with the treasuries. Okay. He was mentioning the treasuries and all that. I don't think he went into that. It was implied that if you want to divest from Israel, you basically have to stop buying U.S. bonds because your tax dollars and foreign investment in U.S. treasuries fund Israel, right? U.S. funds Israel. So if you want to defund Israel, then stop paying taxes. Stop buying U.S. treasuries, U.S. bonds. The U.S. government is funding Israel. That was what was implied by that message there. If any pension system, any government system, any public system, anything wants to stop supporting Israel, well, they got to kill themselves, basically. They got to commit seppuku because the U.S. government is what's supporting Israel. That's what was implied in that. Money runs the world. You know where your tax dollars going. So if you have a pension in a government agency, you want it to go up, well, you're supporting Israel at the same time. So shoot yourself in the foot then. I think a lot of people, they want to say a lot of things about not supporting wars and things like that. Well, let's see if your mouth is where your ass is. See what happens. Are you really going to really support it? Because I think a lot of people are too dependent on how things are run at this point to say they're going to stand up to their principles. Look at those protesters. Once Jagdeep told them, like, hey, well, you want to stop supporting Israel? Well, I'll just start cutting off the bonds and treasury. Oh, no, I can't do that. See? You can't, can you? Anyway, yeah. Oh, man, if we make that into a short and gets too popular, this whole channel gets shut down. It's not even conspiracy, bro. That's why it's like you don't need to be conspiracy to know how the world works. It's just how it is. So anyway, so it's 1 hour, 30 minutes. I'll come back before the close, maybe, if anything interesting happens. Yesterday, I was like, if the CPI was doing it, it's nothing happened. CPI, nothing burger. PPI today, nothing burger. It's been very, very subdued, which gets me a little suspicious. You know what I mean? Like, I don't like it when it just stays subdued like this. Very suspicious. Oh, value-based funds for that? Nah, I don't know. Like, I'll have to go over more of the fun stuff, but yeah, I don't know too much. I don't know too much about like specific things. There's growth and there's value. There's small cap growth, small cap. I haven't gone through all that stuff, but yeah, I mean, it's option expiration week. So, like I said, Garion, you have to remember the third Friday of every month. You look at that week, you're always suspicious into next Monday. So the first Monday after the third Friday. So the whole week into that third Friday, option expiration. Then you go to the Monday. So that's why one of the lessons I did was about that. And, particularly when you look at the banking holidays, right? So the one that was really weird was the Columbus Day one. So the markets open on Columbus Day, but the banks are closed on Columbus Day. Then we did it again with Veterans Day, right? Veterans Day, banks are closed, but the markets open. That's why you look at like, ooh, something weird's going to happen. I know that some extra weird stuff's going to happen. So I'm still waiting for that extra weird thing to happen. Yes, there are halal funds. Yeah, there are. Claris was talking about them. Yes, there are. And one of the funny things that I introduced to the 24-hour streams was I was talking about Islamic finance, because the reason I was interested in it is because I go to the public library and there was a whole aisle just on Islamic finance. That already got me thinking, like, if there's a whole aisle full of books about Islamic finance, I know this is important. especially nowadays where most of the new money, the nouveau riche, are concentrated in the UAE, Qatar, right? And, Bahrain, all these Gulf states, and Saudi Arabia is coming up. So a lot of this new money is coming in. And that's why I think the banking services, the finance services, they will start catering to a lot of Muslim clientele. And so if they really care about being compliant to Sharia, then yes, that is important. That's a lot of business right there. Just having packaging investments that don't touch pork, don't do anything weird that's against the Quran and the hadiths. That's quite important. So yeah, that's funny stuff. I think that's funny stuff. That's like extreme ESG, I think, right? that's like some other form of ESG where you go the other direction. So this is SMCI. I was gonna put this up for the end. You see this range I drew from this candle here. Once this builds up enough energy, it'll try to break out. That's my guess. And I'll sell whatever I did here up here. Keep the rest. Hold the rest for just in case we get into Nvidia, $40 a share. So yes, I think buying around 18 or lower is a gamble, but it's worth it right now. We see Bitcoin try to get back at 90, so I'll be waiting with bated breath how that goes. But otherwise, yeah, nothing else to talk about. Oh yeah, like let's look at the SPY and all that stuff. So SPY, S&P 500, you see it's like weakening, and you see this thing here today. It looks like it wants to go down. So I wouldn't be surprised. So get your cash ready. Get your cash ready from tomorrow into Monday. See what you can get, see what you can grab. But I think Bitcoin, definitely a priority still. That's definitely a priority. GameStop, potential priority there. GameStop. So Bitcoin with the miners. Okay. I think marijuana, you can hold off on that. You don't need to care. I'm not sure about the quantum computing. This stuff is kind of crazy. Kind of crazy still. And we have ASTS earnings after the close. So I'm going to be watching this one, see if Rocket Lab, Lunar pulls back into range, and then watch it for the rest of the day. And then TMC after it closes as well. So there's a lot of penny stocks to view, but most of the earnings are done. Most important earnings are done. Yeah, wait a minute. We have AMAT. AMAT. That will affect semiconductors. So I'm going to watch that one. So this one will happen after the close, and this is the last big one before Nvidia next week. This is the last big one before Nvidia. Disney is up 10%, I think, right? Let me see. It was pre-market. It was up 10%. I don't know what it's doing now. So it's up 7% about. So 6.8%. So it's still forming this bottom. It made the last low, COVID low, in September, October 2023. It kind of almost touched there again in August. It's still a struggling company, but hey, maybe if you need a blue chip stock, could be something to watch into next year. Otherwise, I can't avoid it. I think the other one was Cisco, right? Cisco. How's Cisco do? Nothing exciting. Still stuck. 58. Okay. So nothing decided there. That's it. So the only thing I'm going to wait for is Alibaba for China tomorrow morning. Alibaba tomorrow morning. We're at $90.59 a share. So I don't know if this is a base or not. It'll report Friday morning. So that's it. I'm going to be watching that. Yeah, what's up, Duwale? Oh, what's up, Duwale? Okay, I'll see you after the close or something like that. If anything funny happens, I'm going to watch Bitcoin, see if it tries to touch 90 plus again. If I can do that. And again, like and subscribe. Donate to Portia. Give Portia your money. Gotta keep the show going. All right. Things will get very exciting December into January. So that's what I'm expecting. So a lot of this stuff will happen then. And I think with the shitcoin, what they call the altcoin, shitcoin stuff, that'll happen into April. So I think April is when the peak will happen. Okay, so I'll keep you updated on that. I'm gonna have to look at the cycle analysis the other guy did and see how it happens with the where we find the local tops. We'll find the local top around April, and we'll find might go for another run into November or something like that. Yeah. And Samantha did not post her latest video yet. Once she does, I'll go over it with you guys. I think, yeah, some people might actually benefit more from a more professional outlet. So if you have a lot of money and you need to do it, she's really good. She's really good. So I can't recommend her enough. A lot of the stuff I've done is from very few people right now. But Samantha is like, from what I've seen, the way she integrates a lot of stuff is what I kind of aspire to be if I was actually running my own show, like hedge fund or whatever you want to call it. Yeah, she's like the template. But yeah, I'm lazy. I don't give a crap about money that much. I'd rather get it passively, But I know you guys got to fight inflation. A lot of you kids got to get extra money somehow on the side. So that's why I'm doing this. But for me, let's see what Zim's doing. Zim just faded that whole move. What the F, bro? Come on. You can't do me like that. Anyway, yeah. So Zim, I'm holding hope. But the problem is this thing has earnings. I can't really recommend people to buy it now. If you bought a bunch at 18, and that's good. But I wouldn't be buying it up here in case earnings was bad. That's what I hate about earnings. And Hims is still fighting. Yeah, gonna keep watching this one. Gonna keep watching this one too. So there's a lot of stocks to watch. That's why you need a team. You really need a team of people, Otherwise, you got to automate it, which is why I think AI is really is going to help a lot of people. Chart reading is really going to be something where AI can excel at a lot better. And we're already seeing it go into accounting, right? So, okay, guys, I'll see you later. I covered everything I need to cover. Yep. See you after the close sometime. Yeah, the gold crack fund. I mean, I was thinking to get the John Gold coin or something like that, but it's gonna take more work than I do because I don't want to make like a pump or dump coin. I actually want to make a coin that's tied to its properties, do all that. That would be really cool. Really cool. And if we do a streamer house, we could fund it through the John Gold coin. We could make people buy and sell the coins and directly fund it that way. So yeah, there's a lot of technology out there with crypto where I think the benefit is to escape the traditional financing world where you have to do a lot of regulation, right? If John wanted to put his properties on the stock market, how much money would that be? A lot. And you have to do compliance, regulations, all these things. So for smaller people to do that, it's better to go into the crypto world. So we'll see. All right, we'll see. So that'll be something in the future. Something in the to-do list. All right. I'll see you guys later.